So in terms of today, I decided to wait for the SPY to hit a more oversold level, and the first two trades that I ended up making on the day were buying SPY call options at the exact lows on the dips, quickly making back-to-back 50% profit returns. Then on the third trade, I ended up having a loss on SPY calls. Once I experienced my first loss on SPY calls as the overall trend was bearish today, I did quickly adapt to the overall trend and I ended up buying SPY put options for another 50% return. And then in terms of the next trade that I ended up making, we had a 100% potential profit gainer during the power hour trading session. With that being said, overall, I went 4 for 5 on the day. This was an amazing trading day. I'm going to be walking you through the unique trading strategies that I use to trade this way towards the end of this video. First things first, we're going to get into the new money-making game plan. In terms of how the SPY is setting up, it is setting up for an amazing money-making opportunity to be buying call options and to also be buying put options. I'm going to be breaking down the two best levels to be buying calls and the two best levels to be buying puts. Let's get straight into the unique price action analysis. So in terms of this game plan, one thing that I looked at was the ES. So what I'm going to show you here is this. In terms of the daily chart, this is the pattern that I'm currently looking at. You can see right here, we have a green, red, triple green to the upside, triple red to the downside. And then the next day, it bottoms at the previous closing price and it has a strong bullish day. As you can see in terms of daily chart pattern correlation, you can see right here, green, red, triple green to the right side, triple red to the right side, right? And then, you can see ES is already going bullish, trying to bottom at that previous closing price. So in terms of history repeating itself, if we are maintaining, if ES is maintaining above this previous closing price, if we're maintaining above this previous closing price, it's going to be a great opportunity to be buying call options heading into tomorrow at the previous closing price. If we are opening up flat, or if we are having a small gap up, the first level of interest is going to be buying call options on the SPY at the previous closing price. With that being said, that's the overall first game plan that I'm showing you. Now, in terms of the daily chart pattern on the SPY, let's break this down. So I'm going to type in SPY here real quick, and I'm going to show you exactly in terms of what it is that I'm seeing on the overall daily chart. I'm seeing multiple patterns here. As you can see right here, we have a red, green, red, and this is the most correlated pattern that I'm seeing in terms of comparison with the overall SPY. Red, green, red, and this is a massive gap down. The red candlestick looks identical. Red, green, red. This is a massive gap down. The red daily candle looks identical. What occurs the next day? The next day, the SPY ends up bottoming at the previous day lows. So in terms of the two key levels of interest to buy call options heading into tomorrow, based off these patterns, you can see more similarities as well. Red, green, red. Next day it bottoms at the previous day lows. So the two levels of interest for calls are going to be 578 if it's reacting bearish at 578, right? The next level is going to be towards the lows. So in terms of the zone I'm going to be looking at, it's going to be 575.30 to 574.50. That's the overall next level zone, right? So if SPY is reacting bullish at the previous closing price, if we're opening up flat, if we're having a small gap up, I'm going to be interested in buying call options in between the zone of 578 to 578.80. That's the first bullish zone. If SPY is reacting bearish, the next zone to be buying call options is going to be 575.50 to 574.50. That's the overall zones that I'm planning to buy call options on the SPY. With that being said, I'm seeing multiple signals where it could potentially have a drop, right? So based off the daily chart pattern, this can either close strong in the middle of the day or towards the highs of the day, or it can potentially sell off. So obviously, if we're buying calls and the trade's working out, we're going to be setting profit stops. We're going to be moving the profit stops higher. We're going to be stopped out for overall profits, right? So we don't have to worry about if it's going to have a massive drop. And then once you see that red bearish 30-minute candlestick confirmation at key resistance levels, you're going to want to be locking in gains and selling into moves as well, along with key resistance, right? Now, one thing we do have to be aware of is the potential levels where the SPY can potentially drop. So in terms of the two levels, the first level is going to be the gap, right? If you disable extended hours, you're going to see we still have a gap during the normal trading hours that's waiting to fill above at 583.32. That's going to be the first level to be buying put options on the SPY. Excuse me, that's going to be your best level to be buying put options on the SPY, 583.30 for a gap reversal. The SPY has been having many short-term trends recently where it has been reversing at this gap, right? You can see right here, the SPY had a gap up, it closed the gap, green bullish 30-minute confirmation, had a nice little reversal. The SPY gap down, it closed the gap, red bearish 30-minute confirmation. This is where we crushed puts, and it had a gap reversal. So in terms of this overall trend, it's been working extremely well throughout the past 10 days. You can see right here, SPY had a gap down, it filled the gap, it formed the pin, red bearish 30-minute confirmation, continued to sell off, right? SPY had a gap right here, it filled the gap at 579.50, green, red, green, bullish 30-minute confirmation, higher support, green, red, green at the previous closing price, bullish 30-minute confirmation. This is everything it is that I'm teaching you. You should have been printing money all throughout these past 10 days alone, just with the one simple gap close reversal trading strategy. That is one of the best strategies, and that's the strategy that I've created. And then you can see right here, SPY had a gap down, filled the gap, red bearish 30-minute confirmation, started to have reversal, and then it sells off the next day. You get the point, man. We're towards all-time highs. This is the highest gap waiting to fill above. It's the best level possible to be buying put options. Set your price alerts and trade at the best levels. Now, in terms of the lower level, this is going to be the lower level. As you can see right here, we have a lot of resistance at 581.50. In a sense, once we kind of cracked this support on the 1-minute chart for the most part towards this like 581.30s to 581.20, yeah, let's go with that. Okay, so look at the 1-minute chart. You see how there's support right here at 581.20, 581.20. Once the SPY cracked that, it had a massive drop. It never spiked up. Therefore, since the trend was reacting bearish today, once the SPY spikes back up for the first time, it's going to try to drop first and form lower highs, even if the overall trend later in the day flips bullish, based off of short-term market price action structure and simple supply and demand. Once we test 581.25, it should drop first. Those 581 puts that are out of the money should go back in the money. Realistically, 570, 580 puts can go in the money as well, right? So when we go to 581.20, if you're seeing a red bearish 30-minute confirmation, if you're seeing resistance forming on the 5-minute chart, 1-minute chart, you can try to scalp puts because it's likely going to drop first, even if it pushes higher later on throughout the day, is likely going to drop first. That's just how that strategy works. This is an overall bearish trend day, and this is key support, 581.20. Once this key support on the 1-minute chart cracked, it never spiked back up, and it had a massive move to the downside. So if it has a big overreaction to the upside, very, very quickly, just as quickly as it dropped, right? So within the next like 1 to 2 days, if it spikes back up to 581.20, 581.40, it's likely going to drop first, even if the overall trend flips bullish and pushes higher. So those are the two levels for puts. That's a simple game plan. That strategy is previous support to react as a resistance, a breakdown retest. We had a breakdown on the 1-minute chart right here, massive sell-off, never spiked back. So if it quickly spikes right back up, it's likely going to drop first. For that previous support, that previous break of support, that breakdown level to spike back up and react as a resistance and to attempt to form lower highs, doesn't mean the overall trend is maintaining, doesn't mean the overall trend has, flipped bearish. It's just, it could be a short-term pullback in an overall sense, right? But that's the game plan for puts. And then the second strategy is the gap reversal. Use those game plans. And then in terms of the call game plan has to do with the previous closing price, make or break to continue the bullish trend. And then in terms of the lower level, that's mainly just based off of the daily chart, nothing too special, right? You could see 578, previous closing price, this is make or break. If we break out and react to support, we're heading back to 581. If we break down and react as a resistance, we're heading back down to 575.40 to 574.40 to react bullish based off the daily chart pattern. As you can see, the market is on absolute fire. And what I really love about this opportunity is it's saying that there's going to be lucrative dip buying opportunities at the previous closing price if we're opening up flat or gapping up, right? Or towards that lower zone if we're just reacting bearish in general or gapping down. And the beauty of this is we are at a very oversold support level on the 10-day 30-minute chart at this 575. And you could see last time we were at this level, the SPY quickly spiked up to fill the gap. And if you analyze the short-term trend of the SPY, it's been quickly filling these gaps. It's been quickly recovering to fill the gaps. And then when it fills these gaps, it has reversals. This is something you have to be analyzing at all times, the 10-day 30-minute chart. You can create your own strategies using the 10-day 30-minute chart. This is a very simple way to trade that works, and it prints at the speed of the light. The 30-minute time frame is going to put you in trades where you can hold for 30 minutes. You can hold for 30 minutes. Every single 30-minute up, you can hold for up to a 30-minute candle. And then if the next 30-minute candle tells you to hold, you can continue to hold, set the profit stops, move the profit stops higher, sell into the rips at the key levels, right? use those levels with the 30-minute chart confirmations. You should have an amazing green day tomorrow. Based off of what we're seeing, man, every single person watching this video should be green tomorrow. That's how amazing the market is setting up for opportunities on calls and opportunities for puts. Manage your risk accordingly. With that being said, use the confirmations. Now, let's get into further education. So I explained to you the levels, I gave you the education behind the overall levels, and you're gonna wanna use the confirmations that I've been teaching you. So when I'm recapping these trades, use the confirmations, man. I'm telling you, the 10-day, 30-minute chart is the best confirmation you're gonna be finding within this overall market. With that being said, in terms of the trades, man, on a bearish day, I did absolutely phenomenal buying call options. Look at this. This is my first trade on the day. At 11:33 a.m., I ended up buying 580 SPY calls at 61 cents a contract. So we go to 11:33 a.m. You're going to see all the time. My fucking trades, they're going to be happening usually 5 minutes before a 30-minute candlestick closes, or 5 minutes into the opening of a 30-minute candlestick. That's when they're going to happen, right? So I'm basically waiting for these 30-minute candlesticks to close to make my trade. I'm using the 30-minute chart on the vast majority of these trades, right? And I'm showing you exactly how it is that I'm doing it. Therefore, if you start to see the way that I see the market, you should be trading in the same way in a sense. So at 11:33 a.m., I bought 580 calls, right? So if we go to 580 calls and we go to 11:33 a.m., you're going to see I bought these calls. This is my first trade on the day at the exact lows. Look at this. I got in calls right here at the exact fucking lows. As soon as I got in, 1 minute later, they're sitting flat. That's more than enough time for you to get in. And then they go from 60 to 90. And I sold the exact peak. I sold the exact peak. I bought the exact low and I sold the exact peak at 11:45 a.m., right? Now, with that being said, why did I decide to buy call options, right? You guys are well aware, if you watched yesterday's video, I was interested in buying calls again towards that same like 581 level. In a sense, you could say there was some confirmation. You know, we had a green 30-minute candlestick right here, but I decided to wait, man. I mean, if we look at the pre-market, if we look at the extended hours trading session as well, SPY was reacting fairly bearish in the pre-market. It kept reversing at the gap. You can see it filled the gap in the pre-market. It kept reversing and then it kept selling off. And then once it cracked support right here, it kept forming lower highs, new resistance levels. Overall, it just kept on dropping. There wasn't too strong reasons to be buying overall call options. But you could say in a sense, there was a green bullish 30-minute confirmation, but I decided to wait because I'm telling you, within this market, if you want to play it safe and you just want to trade the best setups possible to have the highest risk reward ratios, I'm telling you, man, the most disciplined way to trade within this market is just to wait later on. The highest risk time to trade is at market open. The chart is less developed, right? And the contract prices can be fairly high. The market just opened up. If you wait for them to decay later on throughout the day, it's lower prices, bigger rewards towards that power hour trading volatile session, right? So trading at market open, it's going to be the most risky time to trade. Now, with that being said, there is times where it does make sense, right? I mean, I could see how for some people it might have made sense to try to buy calls because we did have the gap that was waiting to fill above. One of the things I did dislike about that 581 level is it already played out. So if a level already plays out, it could be less likely to work and not as good, meaning you're going to want to use strong confirmations. But in terms of below that, it's best to go with the next overall level, 579. I do want to give a big shout out to G-Roar, though. In terms of his game plan, he said to buy call options at 578. In the levels above that, he was focused on going short. So one of the trades that I made today also had to do with his key level at 578 on the long side. But anyways, in terms of this trade, man, let me break this down. So I'm going to disable extended trading hours, and I'm going to show you exactly in terms of what it is that I was seeing on the 30-minute chart. This is very simple, right? So, you know, you can see I highlighted all these fucking ovals, these 30-minute candles to kind of show you what it is that I'm looking at. So, in terms of this trade, if we go to 11:30 a.m., so 11:30 a.m., that's the opening of this candlestick, right? So this 30-minute candlestick opened at the previous lows of this red candle. So why did I buy call options basically right after this 30-minute candlestick closed red and bearish like that? Why did I decide to buy call options? Well, in terms of some short-term trends that I've been seeing recently, when the SPY has this like 3 slanted red trend to the downside, next 30-minute candle tends to be a bullish reversal and it tends to bottom of that previous 30-minute low. So I'm going to show you many opportunities where this worked into this week. And this is also like that same daily chart pattern that I just showed you on ES, in a sense, on the daily chart pattern that we can use for a foundation heading into tomorrow for a bullish trend day. So you can see right here, like I said, these daily chart patterns also work on the 30-minute chart as well, right? Just different time brackets, different foundations, different confirmations. So you can see right here, we have 3 slanted red candlesticks to the downside, right? And then just look at the similarities. You see the wick at the top, you see the wick at the top, and then you see this little wick at the top and this wick at the bottom, right? So we have 3 red candlesticks slanted to the downside, and then you have this wick at the top, right? A lot of similarities. And then the next 30 minutes, after that 90-minute bearish slanted red downtrend, it has a bullish reversal, buy calls at the opening. And it happened many times. 3 slanted red to the downside. If you look at this candlestick right here, nearly identical to this candlestick right here, right? 3 slanted red to the downside. And then if you look at this candlestick right here, nearly identical to this one right here. So that's what it was. It was the 3 slanted red bearish reversal trend. And then when you have this big red candlestick right here, this big red candlestick right here with the little tip, you see the tip at the top, you see the tip at the bottom, the tip at the tip at the top, the tip at the bottom, right? So what I'm doing is I'm looking for as many similarities as possible. I want it to look fucking identical, man. That's what I'm looking for in a sense, man. And there's just so many times where that pattern has worked throughout the past 10 days. So like I told you, in terms of capturing these 30-minute patterns that I'm showing you, this is more of something where I'm waiting for the 10-day, 30-minute chart to develop rather than taking these patterns out, writing them in a book, and then if I don't see the pattern happen for like a month or 2 or 3 months, and then it finally happens after 3 months after the blue for the first time, try to catch the trend and try to trade it that way based off the memory. I don't like to do that. My main focus is just waiting for the 10-day, 30-minute chart patterns to develop. And then once I see that something's been repeating itself, then I try to capture it, right? So typically I'll miss out on the first time, but there are certain trends and patterns where, you know, if I know what it looks like and I remember what happens, right? And you can also write it down in books and stuff like that. You can back test it. And then it appears like a month or 2 later. There are certain situations where I will take advantage of that. But in terms of my experience of capturing overall trends, as a day trader, when you're day trading, it tends to work best when you focus on short-term trends developing. So you just wait for short-term trends to develop, and you just look at the 10-day, 30-minute chart, and you know it gets more advanced. There's key levels, there's foundations. Again, this is just some of the basics. It gets fairly advanced, but you know, you can see right here, there's just been several times where this has happened throughout the past 10 days. You had 3 red slanted candlesticks, and then the next 30 minutes is bullish. You have 3 red slanted 30-minute candlesticks, and the next one is bullish, right? Some look more similar than others. I showed you the one that looked most similar. It was this one, and then also it had to do with this big red bearish candlestick, big red bearish candlestick, right? Big red bearish candlestick. Next 30 minutes is green. Next 30 minutes green. Next 30 minutes green. In terms of the level, we were at a very oversold level. So in the new morning game plan, it said to buy calls at 578, and we were nearly at 578. So those were some of the reasons, along with that, you know, 90-minute pattern and stuff like that. And then you kind of just hold into the 30-minute close because it says it's going to try to close strong and bullish. It's going to try to close strong and bullish, and you sell into the ribs, you sell into the key levels, right? So fairly simple. That's just some of the basics. It gets more advanced in terms of breaking down the 30-minute candle with a 1-minute and 5-minute chart, but I'm not going to be getting into that. So that was the first overall trade. Now, if we go to the second trade, you know, so that's how I saw the market. And if you go back and you watch the videos, I talk about that 3 slanted red 30-minute candlestick pattern all the time, right? So that one's just well experienced, happens all the time. In terms of the next trade, it was on 579 calls. So at 12:32 p.m., I ended up buying these 579 calls. So if we go to 579 calls at 12:32 p.m., you're going to see, as you can see right here, I'm going to show you 12:32 p.m. I ended up buying these calls at the exact lows, and I sold at the exact peaks. So right here, this is where I got in on the overall calls. And then I quickly exited into the 74 range very, very quickly. And then I quickly exited the rest as well. They went to 80, right? So that was a phenomenal overall trade. The exits on that was 71 cents for a nice return there. And, you know, sold the rest at 84 cents on the high of that overall wick, right? So the first 2 trades, I'm buying calls at the exact lows. Now, how am I able to do that? So I explained to you the first one. In terms of the second one, let's go to 12:30 p.m. So if we go to 12:30 p.m., you're going to see I ended up buying call options, right? So if we go to the trade right here, I'm going to show you. So 12:32 p.m., I ended up buying call options into the opening of this candlestick. So when this 30-minute candlestick closed red and bearish, right? just like this one recently closed red and bearish. What happened? Next 30 minutes was bullish, right? So I'm going to be interested in buying calls due to that reason as well. But also, just looking at this, so remember, I bought the calls right here when this 30-minute candlestick began to open, when this one closed right here, right? Also, just looking at the overall recent patterns, man, in terms of some like recent patterns that I was looking at, man, like I said, it was mainly just the key level. The key level in the new game plan said 578 as well. But just simply looking at this overall pattern saying, we have this big red bearish candlestick, next 30 minutes is bullish, big red bearish candlestick, next 30 minutes is going to try to be bullish, buy the dip when it cracks the previous 30-minute low, and then sell into the rip. Those were the main reasons. That one was more of just going with the key level on the plan and more of just using that 30-minute chart, very basic. It wasn't the best overall confirmation. I will give it that in a sense. But I'm telling you, man, that was just a fairly simple trade in a sense. So that was the reasoning in terms of, the reasoning behind buying those overall call options on the SPY, right? So in terms of the next trade, let's get into this, man. So in terms of the next trade, I'm going to show you right here. So I ended up getting in on calls again. That was just not the move. That was the one loss that I had on the day. I bought 579 calls after having back-to-back wins. Now, when you have two smaller wins, so in terms of those wins, those were fairly decent wins, right? So that means you should have been green enough to just walk away for the day. If you have two decent wins or two smaller wins in a row, or if you just have one big in a row, you are green enough to stop trading. So when you're green enough to stop trading, that means if you choose to continue to trade, at the most, you risk half of your gains, which is a lot. And then at the least, you risk like 25% of your gains. So you risk 25% of your gains. And then if you hit that max risk where you get stopped out, giving back 25 to 50% of your gains because you chose to continue to trade, which you don't have to, then from there, you have to call it. You cannot keep trading because then you can risk all your fucking gains and you're not going to do that, right? So the day already started off phenomenal. This trade didn't work out. In terms of the next trade was fucking phenomenal. I adapted. So I tried calls again. It didn't work out. Now this is where things get really interesting. I finally adapted to this overall bearish trend. I ended up buying 576 puts at 55 cents a contract at 1:30 p.m. Like I said, in terms of my fucking trades, because I actually have a fucking system, you're going to see that I'm literally entering like right when a 30-minute candlestick is about to close or open almost every single fucking time. It's not by fucking accident. This is all strategically planned. This is all systematic. Like I told you, with the 30-minute chart, I'm finding 2 to 4 trades every single fucking day that are yielding the biggest percentage returns within the fucking market with the asset class that we paired it with, buying cheap, low risk, far money option contracts, right? So I adapted to the trend. In terms of adapting to a trend, all it should take you is one fucking loss if you're holding your trades. If you can't adapt to an overall trend day on one fucking loss, you don't know what the fuck you're doing, man. You're just overtrading, you're trading fucking blind. So I had my one loss on calls. I tried it 3 fucking times, 2 wins in a row, more than green enough to call it. And then the third trade didn't work out. So the next trade I adapted. I bought puts, 576 puts at 55 cents a contract. Why did I buy these puts, right? So if we go to 576 puts, I'm going to show you. This was a phenomenal trade. So in terms of the puts, this is where I got in right here. I ended up getting in towards the lows right here, timing it fucking perfectly. Do you notice how I'm timing these trades fucking perfectly using this 30-minute chart? Are you noticing how whenever I get on this fucking trade, it's like it just works in my fucking favor nonstop when it fucking works? It doesn't fucking chop around. It doesn't drop a little. It just fucking works. I'm telling you, I have a 30-minute fucking system that prints at the speed of fucking light. So anyways, those quickly went to 80 cents. And then if you held them, they went to 180 cents. I told the chat, they're likely going to go to 100. And I told the chat, SPY's overall bearish. It's going to try to close weak at the lows. So I told them, you should leave some runners. This could be a big overall play. We're in fucking cheap, low risk. With that being said, that was a phenomenal trade. Now I'm going to explain to you why I bought those puts at 12:30 p.m., right? So it had to do with adapting on that previous loss on calls. But in terms of what I was seeing, I'm going to walk you through this, man. This was very, very simple. So in terms of 12:30 p.m., that was right here, 12:30 p.m. I bought call options on the opening of this 30-minute candlestick. It opened up right around here. Why did I decide to do that? I was looking at the overall trend, man. So the overall trends that I was seeing, I'm going to show you. You have 3 red candlesticks slanted to the right side. You have 3 red candlesticks slanted to the right side. And then you have a red, green, red pattern. You have a red, green, red pattern. And then what did SPY do? It just sold off for fucking hours, closing weak at the lows, right? And the daily chart was already setting up so bearish. So that was the reasoning behind buying those fucking puts. We had the 3 slanted red right here. We had the 3 slanted red right here. and then we had the red, green, red, and then we had the red, green, red. And then from there, it just sells off. So you're going to want to short the rips, short the rips, short the rips. And if you just look at the overall candles, man, the 30-minute candlesticks gave it away on the overall bearish signals, right? And then in terms of just more comparisons on how SPY has been reacting when this red 30-minute candlestick looks like this. So what I want you to do is, I want you to identify this red 30-minute candlestick right here. So look at this trend. Red, green, red, right? We have the 3 slanted red. We have the 3 slanted red, right? And then we have the red, green, red. And then we have the red, green, red. And then as you can see, the 30-minute candlesticks are beginning to top towards the opening of the 30 minutes, towards the previous 30 minutes right high, right? So if you look at this wick right here, I want you to take a look at this. Look at this wick right here. It tops towards that previous bottom wick, right? And then look at this wick right here. It tops towards that previous bottom overall wick, right? And then look at this 30-minute candlestick. Every single time recently, the SPY has been forming this overall 30-minute candlestick. Look at this 30-minute candlestick right here, and then just look at this 30-minute candlestick right here. Look at this 30-minute candlestick right here. It sells off, which was a confirmation to also buy and add to calls at 1 p.m. This was a great confirmation to get back in, on puts at 1 p.m. Those were all the reasonings behind me buying puts right here. Puts right here towards the opening of that situation, right? So like I said, if you go to the overall trade, 1:30 p.m. So in terms of this, right? This is literally 1:30 p.m. I'm in right here. This is where I'm in on this 30-minute candlestick. This candlestick is red and bearish. You see that? This candlestick is red and bearish. This candlestick is red and bearish. You see how they all look identical? Next 30 minutes, it tops towards the opening, sells off. Next 30 minutes, it tops towards the opening, it sells off. Do you see that? And then I also compared the pattern in correlation, right? So look at this, man. You're going to see very similar candlestick, very similar overall price action, right? So 3 slanted red, red, green, red, and then this candlestick over right here tops out, sells off lower, right? 3 slanted red, red, green, red, tops out, sells off lower. So that was the reasoning behind puts. And like I said, I told the chat that 100 cents a contract, it's likely going to go above 100, and you can leave runners in that situation. So I was selling at 65 and 74. But I was telling him, man, this can be one where it makes sense to hold overall runners based off this overall pattern that I was looking at on October 15th, where it can just continue to sell off throughout the day, which is what it ended up doing in that sense, right? And then in terms of the final trade, it was on calls. I took a YOLO on calls at 578 calls. The one before that was just a small win, not going to be going over that. But I took a small trade on calls, these 578 YOLO calls at 30 cents a contract at 3:55 p.m. The reasoning behind calls had to do with the 30-minute chart. So if you look at the 30-minute patterns, you're going to see right here, you have this green bullish candlestick in the middle. You have this green bullish candlestick in the middle. You have this green trend reversal candlestick pointed to the upside. You have this green trend reversal candlestick pointed to the upside. And then the next 30 minutes is very green and bullish, right? Next 30 minutes, very green and bullish. That's why, in a sense, I was bullish on calls. I just waited way too fucking long to get in. And I also took a trade on puts very quick on that. Just scalped it, got in, got out super fucking quick. It was a small win. But that was the reasoning behind buying those call options for a very strong bullish close, because that's what it overall did last time, right? If you just compare the same exact pattern in terms of what happened yesterday, right? And it was forming higher support. The bottom of this green 30-minute candlestick closed at this previous resistance, which is bullish. It's turning this previous resistance into support. Therefore, it's going to try to spike back up to this 578.80 wick, right? Green bullish candlestick in the middle, green bullish candlestick in the middle, higher floor above previous resistance right here, green bullish candlestick in the middle, higher floor above previous resistance right here, and then a green bullish 30-minute close, and then a green bullish 30-minute close. That was the reasoning behind call options. So in terms of that trade, you could see within just like 10 minutes, it went up 100%. Right? So in terms of that trade, I got in right here. A minute later, it had a very nice spike to 43 cents. And then during after hours trading session, it went to 56 cents a contract. Those were the reasons behind all the trades that I ended up making today. So with that being said, guys, today was a long day, got a lot of work done. That's why, I sound a little bit more tired. But anyways, man, this is a lot of work. You guys have to understand, man, this is a lot of fucking work. I literally watch and trade the market from literally just watching from market open till close. Like, it does wear you out a little bit when you're watching numbers all fucking day on a fucking screen, just trading all day. I don't have to do that. But I do have a more systematic approach where I don't have to kind of just watch it all the time, because I get alerts. I get alerts on my prices I'm interested in buying. And I also get time alerts. I get time alerts every single time a 30-minute candlestick is about to close. I'll get a time alert sent to me, just a quick little alarm saying that, 30-minute candlestick is about to close in 5 minutes. Look at the overall chart, right? So you can be more systematic. You don't have to sit there and watch this all day. But one of the reasons why I do that is just because I genuinely enjoy doing this. I genuinely enjoy like watching, trading, observing the overall market all day. And that's what's going to get you the best results and instill that fucking discipline. If you're watching it all fucking day versus being more timed and strategic, you can be successful that way. It's just one who really sits here and puts in the work and has the most experience, even if they're just watching and observing at times. That's going to be the person who really has the most strength, rather than just being more systematic and not watching and following the price action, right? To get a taste of price action, you have to watch it and you have to also trade it, right? If you're just not watching it that much, you're going to have a lack of that feel and taste and that observation of how the price is moving, right? You want to be good at trading price actions, you got to watch how price is overall moving. So with that being said, for those of you who are serious about trading alongside with us, it's going to be the first link down below within the description. You can follow the overall trades with us. I alert everything it is that we're doing in real time. There's new analysis, there's new trading plans, and I alert all the trades and analysis within real time. Went 4 for 5 on the day. It was an absolutely amazing day. It's the first link down below within the description. If you want to join us, we buy cheap, far out of money option contracts, very cheap, very low risk. We do not use stop losses. You can put your entire position size into the trade as your max risk per trade, meaning you can just lose it all and you lose your max risk per trade, like 2%, 3% of your account. Obviously, if you're starting small, you're going to have to risk more, right? But this is the cheapest, lowest contracts, 20, 30, 40, 50 cents to be making multiple 100% profit returns. And then every single month, we have a couple trades where we make 1,000% returns. Every single month, there's multiple trades where if you leave runners, you can make thousands of percent, right? So the percentage gains are always going to outweigh the percentage losses. And we have the highest win rate in the game doing this as well. Not that we need it, because with this system, you could be successful with a 30% win rate. If you make a 1,000% return on a trade and you're sizing it properly, you can lose 9 trades in a row. You can be profitable with a 10% win rate in that particular situation. And like I said, we're hitting 3 1,000% trades every single month. So over here, losing is a personal choice, and not that we need it, but we do have the highest win rate in the game doing this. And that's what we do. We mastered price action, we mastered trading the chart, and we paired this with buying cheap, low risk, far out of the money option contracts. That's what we believe to be is the best trading and alert system to have. And you can follow the price action and trade alongside with us. Calls go up in direction, puts go down direction. You can use prop firms with this if you like. Like I said, we're trading options. We have members in the group. They are using prop firms with this. One of the edge, though, you do have with options is the contracts can just go against you. They can drop 50, 60, 70%, and we don't have a stop loss. So if we want to hold it and it's not making sense to sell the move and just let it ride out, expire worthless to zero, we'll just fucking hold the trade. And we have the entire day for the trade to go in the money. You understand? We have the entire day for the trade to go in the money, and we never get stopped out because we don't use stop losses. And this is the only system where you can actually put in your entire position size, meaning every single dollar you put into these contracts, it can be equivalent to your max risk per trade. And you could still make very good money doing that because the percentage gains are so fucking big. You can outperform people on the dollar side by risking less and by risking your entire position size as your max risk per trade because the percentage gains are so fucking big. This is the only chance of survival if you're trading with real money and have a small account. Rich people prefer to do this because when you have mastered trading, you realize this is the best way to trade options. No other way. This is the best way possible. Why would I buy in the money options if they're going to be more expensive and yield me less percentage gains when I could buy something that's cheaper, remove the stop loss, risk less of my money, and have that edge where I don't need a stop loss because I can risk the entire position size as my max risk per trade, and have the edge where I can hold these out of money contracts for the entire day and sell them in the money. There's always that chance they go in the money. And in my experience, 70% of the time when we enter a trade where we do not sell the move and we hold, risking it, so if we're down like 50, 60, 70% and it's a dead play and we choose to hold it, risking it to go to zero, 70% of the time when we do that and we don't sell the move for a loss, right? Because we don't use stop losses, it tends to go in the money and it tends to come back to life. We have the entire day for the big move to go in our favor. But with this 30-minute system, we time our trades very, very strategically. So it's going to be very rare where that happens in a sense. But, trading last 30 minutes of the day, it could be hard to time an overall trade. But if that last 30-minute candlestick works in your overall favor, you got nothing to worry about because it's likely going to close in the money on a strong bullish or bearish day. And then in terms of trading at the market open, it could be very risky, but on a bullish or bearish trend day, if it's not working out in the beginning, or if it is working out, it can close deep in the money within your favor. And if the overall price and time to get in was at market open, that can yield you thousands of % of returns. And then the last 30-minute candlestick in your favor, that can lead you thousands of % of returns as well, trading SPX. So in terms of more background to the system, we set profit stops. The reason why we set profit stops when we are green is to ensure that we do not go green to red on an overall trade. And when we set those profit stops, we like to add to winners as well. Adding to the winners is going to increase the wins when we're up a small amount of money, a small amount percentage-wise, 5, 10, 15, 20%. We like to quickly add to winners to increase the winnings. We like to set the profit stop to ensure that we don't go green to red and protect the new average cost. And we like to move the profit stops higher to ensure that we don't get back the bulk of our overall gains if the market has a move against you, in that sense, like moving that trailing stop up, moving that profit stop up. So that, in a sense, is some things that we're doing differently. This is the system that we chose to optimize for. Like I said, if you are trading the chart, if you are trading price action, you can trade any fucking thing. You can trade fucking futures, you can trade penny stocks, you can trade ETFs, you can trade whatever the fuck you want to trade, as long as it's working with trading with the chart, right? So trading with the chart could be a foundation, but what's going to be the asset class that you're going to trade? Are you going to trade with a prop firm? Are you going to trade with real money? If you trade with real money, are you going to trade with penny stocks? Are you going to trade ETFs? Are you going to trade in the money options? I already explained to you why that makes no fucking sense. We know how to trade. We know how to time our trades. We know how to hold for long periods of time. We know how to outperform every single fucking trader that you're fucking following. It's very simple. Look, man, for those of you who actually follow this channel, you guys are well aware that we're the fucking best. If you want to trade alongside with us, it's the first link down below within the description. You will not find a better group out there that is trading far out of the money option contracts, selling deep in the money for the biggest percentage gains with the lowest risk within the market. We've created a system that actually allows people with small accounts to have a chance and to have a chance within the market and to survive. And like I said, rich people are trading this way because we don't see the need, or we don't see the sense or logic in buying in the money option contracts when we're at the top of the game. When you're the true best trader you can possibly be, you would be optimizing for far out of the money option contracts instead of buying in the money option contracts. Buying in the money makes no fucking sense. You're going to be paying more. If you're paying more, you're risking more. You're putting in more capital. You're also going to have less risk, right? We're controlling 100 shares every fucking contract on SPY, and we're buying more fucking contracts than all these people in the fucking money. It's going to give us that maximum leverage, those crazy fucking percentage gains. It's going to allow us to remove the stop loss. It's going to allow us to remove the max position size of overall trade. It's going to allow us to risk small amounts of money to make the biggest percentage gains. And our big percentage gains are going to outweigh their dollar gains, and we're putting in fucking less. It's just common sense if you put 2 and 2 together. So for those of you who are serious about making fucking money and trading alongside with us, it's going to be the first link down below within the description. Based off of tomorrow's game plan, I would say this is going to be a very simple, easy day to trade. I would say based off of my 10 years of fucking experience, we're going to have so many green trades tomorrow. It's just going to continue to outperform every single fucking trader that you know on the fucking planet. I would say we're just going to keep on winning non-fucking stop. That the money printer is just going to keep on fucking printing because that's what we've done. We basically turned this app, this fucking iPhone, into a money printing machine where it just keeps on printing out non-stop fucking wins, non-fucking stop. And it took like over a fucking decade to get here. So this is who, in a sense, you're competing against within the market. This fucking market, it's not a fair fucking place. Everyone's out to take your fucking money. Everyone's out to fucking destroy you, right? Everybody wants to make money. Well, someone has to fucking lose. And these are the types of people that you guys are going to be competing against. So with that being said, if you want to surround yourself with people like us, if you want to surround yourself, with us, it's going to be the first link down below within the description. We will absolutely crush every single person who is choosing to go against us. Like I said, man, it's fairly simple. You go into the program, you take the trades are fucking working. You go against the overall trades, you're going to be losing on the overall trades. I'm just keeping it very blunt, very fucking simple. We're winning non-fucking stop. The wins are just non-fucking stop. We're outperforming everybody is that you know, percentage wise, and we're putting small accounts in the best positions and system to be putting them in possible, right? And like I said, if you don't want to trade the options, you don't want to trade with real money, there's nothing else to fucking trade. This is the best fucking way to trade if you're trading with real fucking money. Only other way, if you want to go that route, you can go the prop firm route. Not going to be getting into that, but like I said, we do have traders in the group. When we buy calls, they end up buying ES, or they end up buying NQ, right? They can do that with the futures contracts on the prop firm. We do have people doing that, right? So with that being said, you decide on how you want to trade this. I teach you the strategies. I explain to you everything it is that I'm doing. Losing remains a personal choice. If you want to join us, it's the first link down below within the description.